everyone. It is Sunday, the 3rd of January, and the very first thing I want to say is Happy New Year. I'm wishing you the very, very best in terms of success and achieving your goals in 2021. And I'm going to start off by having a look at the major currencies. And before I do that, I'm just going to have a look at any upcoming high-impact news this week. So Monday, there's some potentially increased volatility on oil. We'll have a look at that in the commodities video. Then having a look on Wednesday, there's Governor Bailey speaking, and so there could be some increased volatility on GBP in the afternoon. That'll be around about the time just before the US session comes online. And then at 7 p.m. Now, this is one that I always give its due respect and a bit of space. This will be Wednesday evening at 7 p.m. This will be out of the US FOMC. Really just monitoring that to see what the bank's approach is going to be towards the Fed's approach, I beg your pardon, towards kind of what's the mood with regards to risk, growth, what's their approach going to be with regards to that. So there could be they could say something that could make the market a bit twitchy. I don't want to obsess about it too much, but I'll be taking note of that. Then on Friday at 1:30, what we do have is non-farm. This will be the biggest kind of news, really, generally speaking, non-farm employment around about 1:30. And so I expect massive increased volatility around about that period of time on most of the major pairs. And that means that for the most part, if I am doing any intraday trading on Friday, I will probably look to secure my trades by 11 a.m. at the latest in the UK, meaning I'm at break even, or I'm exiting the trades, or just, so that I'm prepared for any kind of spikes that might kind of come into the market. It can often go into a coma before the news comes out. All right, so having said that, let's move across and have a look at the charts. So starting off with the dollar basket, one of the things that I notice almost immediately is although we do have a really nice downtrend on the daily, so we've had a nice weakening US dollar, and this is something that I am very happy to see. We kind of broke below this level of support 95 that's held for a while, and we started to head towards 90. We also breached 90. We actually went halfway across below, sort of beyond the halfway point towards 89. One of the things I just want to highlight here is we finished off Friday with a bullish candle, but most importantly, there's without a doubt is bullish divergence on both of the indicators below, implying that there is at some point in the near future is likely to be at least a weekly retracement, which means that it's not inconceivable if it does happen this week. It's starting to show signs of exhaustion, that we could see price head back up towards, say, 91 or potentially even up towards 92 as part of a weekly retracement. If in the longer run we find that the trend is going to continue down, we're going to continue to see a weaker US dollar, this is likely to be the case. This will be a really good area for it to turn around, and we could see price taking a bit of a breather, retracement up there for a couple of weeks before then resuming the longer term trend. I would really like just to see trends returning to the markets, which we haven't had for a very long time. I'd like to see the dollar continue to weaken just to mix things up a bit. So that is something that I'm going to be keeping an eye out for this week. The market should be kind of waking up now, pretty much back to normal, and there should be some good opportunities. Again, here we can see that euro dollar hit 1.23, had a strong reaction against it. It's also got bearish divergence. There is a hint, especially with this price action, that price could start a weekly retracement, could do it. It's in the right place to do it, and then head down towards 1.2. That makes the most sense. Nice little previous high. It's also a monthly level. It's also a nice round number. Potentially also a fib level, haven't really checked it, so that would be a nice point for it to retrace back to. Looking at sterling against the US dollar, this is actually looking quite nice and strong now, considering it's been a little bit wobbly all the way through. A nice little bullish candle last week off nice support and pushing beyond 1.35. So all of this shows to me to see that there's still potential for this to continue up to 1.4. If there is a strong dollar retracement, yes, it would make sense that it would impact this as well. But I have to say, comparing this to the euro dollar, this is looking more bullish than the euro dollar, and it might find a way to continue pushing a little bit higher. Then having a look at Aussie dollar against that, that's also now overextended, coming into a monthly resistance level. Okay, historical level here at 0.7750. Not so much divergence, a little bit flat, but yes, certainly this is a nice healthy trend. Again, this supports the idea of, generally speaking, a weakening US dollar, and that means that the others will strengthen against it. So in this area, yeah, I could anticipate a bit of a pullback into the moving averages, or potentially back down towards 73.50 if we do decide to get that, if we get that weekly retracement this coming week as opposed to, say, next week. And that could be triggered by non-farm payroll, could be triggered by FOMC, but that certainly looks technically to be the case. Then having a look at Kiwi dollar against the US dollar. Again, really nice healthy trend. It's got some room to go up to 7,300. The weekly had a bit of a retracement back into weekly support and resistance and is now pushing on. This also has that potential, similar to sterling and Aussie dollar, to continue up 7,300 and then take a bit of a breather, and there's a monthly level up ahead. So all of these show the potential to maybe push a little bit further before having a larger correction on the weekly time frame. So I'll really be following the dollar. The dollar is going to be the bigger driver between the two, but I have to say that quite a few of these seem to be enjoying the weaker US dollar. Then having a look at dollar yen. This one is obviously just quite choppy and kind of messy, but it is continuing to drip lower. And the longer term level for me will be 101. If it can, it'll make a decision if it's going to do a longer term change in direction. That would, for me, make the most sense. But it's incredibly choppy and it's really just drifting down. That just shows that the balance between buyers and sellers, there are slightly more sellers than buyers, but it isn't tilting as heavily to the bears, towards the bears. They're definitely not necessarily in control. And so I anticipate, again, for now, dollar yen still sits on my list of currencies to not actively trade. I do not believe that it adds value as a major currency for traders. Then having a look here at dollar Swissy, strong correction there, obviously overdue, bit of a strong, but that's quite a strong correction. It's broken that downtrend on the daily. This makes the most sense that this will continue up to 0.9 at the very least. That's a nice bullish weekly candle there. We've got bullish divergence here. All of this implies certainly that dollar Swissy might be looking to do a deeper retracement. If it does it on a weekly basis, my immediate target is 0.9. I'm not trading it that way, just monitoring it as a retracement. Dollar CAD still looks really good. It's done a really nice breakthrough of a monthly support resistance level. There was also a potential trading opportunity, really nice, came back up, tapped it, and has continued down. This was over the holiday period. And right now, it actually looks like it could, similar to in the way that sterling looks like it could continue up, even though the dollar might retrace and therefore it should retrace as well. This also looks like it's quite keen to continue down regardless of what the US dollar is doing. I don't want to discount that. The US dollar is obviously the stronger of the two, and if it does a really big move, it's going to move everything else out the way. And that's it. So I'm just going to wrap that up in terms of what I'm looking at on the majors. As I said, there's some definite divergence there, implying that there is a retracement, weekly retracement on the horizon. The question is it going to occur this week or next week? It's going to happen most likely, potentially even towards the tail end of this week. And so I'll just be prepared for that. It means that if I am doing intraday trading, I'll be just making sure there's a stop loss in place, managing the risk and being prepared for a potential change in daily trend. There we go. Thank you very much, everyone, and chat to you next week.